Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, is making headlines for his unexpected stock sales. Known for his buy-and-hold strategy, Buffett's recent divestments have raised questions about his outlook on the market. What's behind these moves, and what can we learn from them? In this video, we'll break down Buffett's strategy, the key stocks he sold, and what it all means for investors navigating today's volatile market. Buffett's unprecedented selling activity. In 2024, Buffett sold around $20 billion worth of stocks, nearly 10% of Berkshire Hathaway's portfolio. This is surprising because Buffett typically buys during market downturns rather than selling. Even during the 2008 financial crisis, he was known for purchasing undervalued assets rather than cashing out. So, why the shift? Economic conditions are changing. Rising interest rates, inflation, and global uncertainties could be prompting Buffett to take a more cautious approach. If one of the world's greatest investors is adjusting his strategy, it's worth paying attention. Why Buffett sells stocks? Buffett rarely sells unless he sees a strong reason to do so. The four main reasons he exits investments include the need for cash. Sometimes Berkshire Hathaway requires liquidity for acquisitions or other investments. For example, Buffett sold Wells Fargo shares to fund better opportunities. Loss of confidence in management. If Buffett believes a company's leadership is making poor decisions, he may exit. This happened with General Electric, where concerns about management led him to sell. Significant business changes. If a company's long-term outlook deteriorates, Buffett reassesses. A notable example is IBM. He sold when he saw that the business wasn't evolving as expected. Overvaluation. Buffett is a value investor. If a stock becomes overpriced compared to its intrinsic value, he's willing to sell, as he did with airline stocks during the pandemic. Understanding these factors can help individual investors make better decisions about when to sell their own holdings. Key stocks Buffett recently sold. Among Buffett's recent sales, three stand out: Snowflake, Chevron, and Apple. Snowflake. Initially, Buffett invested in this cloud computing company during its IPO. However, as valuations soared, he reduced his position. This reflects his cautious approach to high-growth tech stocks in a volatile market.
Chevron. Despite historically favoring energy stocks, Buffett sold shares of Chevron, possibly due to oil price fluctuations and geopolitical uncertainties. Apple. This sale was the most surprising. Apple has been a cornerstone of Berkshire Hathaway's portfolio. However, as its stock hit new highs, Buffett opted to trim his position, possibly due to concerns about slowing growth and overvaluation.
These sales indicate that Buffett is adapting to the market rather than blindly sticking to past strategies. Buffett's concerns about the banking sector. Buffett has historically been a strong supporter of banks, with major stakes in Bank of America and Wells Fargo. However, his recent sell-offs in financial stocks suggest a shift in confidence. The banking sector has faced turmoil, including the collapse of Silicon Valley Bank and broader economic uncertainty. This instability can impact depositors' confidence and increase risk. Buffett may be taking a defensive position, wary of further financial disruptions. The Apple stock sale. Key reasons. Apple's dominance in the tech industry is undeniable, but Buffett's decision to reduce his stake signals concerns about slowing growth. iPhone sales are stagnating, and growth in key markets is plateauing. Competitive pressures. Tech competition is fierce, and maintaining an edge is challenging. Tax considerations. Selling during a high valuation period allows Buffett to manage capital gains tax efficiently. For investors, this is a reminder to regularly assess whether their holdings still align with their long-term strategy. Buffett's $100 billion cash reserve. Buffett is currently holding approximately $100 billion in cash and short-term investments. Why? Because he's waiting for the right opportunities. Historically, Buffett has used cash reserves to buy undervalued assets during market downturns. This strategy worked well in 2008, when he acquired distressed companies at a discount. His current cash position suggests he may be anticipating another major buying opportunity. Lessons from Buffett's market strategies. Buffett's approach during speculative market periods offers valuable lessons. In the 1990s, he avoided the dot-com bubble, preventing huge losses. During the 2008 crisis, he bought distressed assets, leading to massive gains. Today, he's holding cash, possibly waiting for a market downturn before making his next big move. Investors can learn from this patience. Instead of chasing hype, Buffett focuses on long-term value and strategic timing. Conclusion: Buffett's recent stock sales and large cash reserves suggest he is taking a defensive stance amid market uncertainty. While his buy and hold philosophy remains, he's showing that even the best investors adapt when necessary. What can you take away from this? Stay disciplined, analyze your investments critically, and be ready to adjust when the market shifts. If you found this video insightful, hit the like button, subscribe for more investing content, and share your thoughts in the comments. Thanks for watching, and we'll see you in the next video.